Morning, Steve Freed in Chicago with the morning grain comments. We have a mixed trade overnight with beans and wheat higher, September corn lower, but July corn with very little open interest left still continue to gain on September. A lot of data out yesterday. Corn exports 26 million bushels, beans 13, wheat 4. Combined numbers were disappointing. Probably offered some resistance to the futures market, but in general, yesterday's big sell-off was due to heavy selling by the funds, 23,000 contracts of beans, 12,000 soybean oil, 24,000 contracts of corn, and 13,000 contracts of wheat as people get out of hard assets due to concerns about recession, inflation, and even the new word, depression. We also noted that overnight, the Dalian futures continued to trade lower: soybeans, soybean meal, palm oil, soybean oil, and corn. We've got now the Dalian soybean oil futures are down about 7% yesterday, palm oil down 10%, and Chinese hog futures are down 5%. We also noted that the USDA lowered the corn rating, 64% good to excellent versus 67, beans 63 versus 65. They did raise spring wheat to 66 from 59, winter wheat from 31 to 30, and 54% of the winter wheat crop is harvested versus 41 last week. Kansas is 83%, which has caught up quite a bit. We, from a weather standpoint, we're looking at 5-day rainfall amounts to continue pretty much in the same areas across eastern Nebraska, southern Iowa, but into central Illinois, parts of Indiana, and Ohio. Those areas are, especially east central Illinois, Indiana, and Ohio, are the driest areas. The forecast suggests that next week we could see warmer and drier conditions in the western Midwest. That could eventually leak into the Delta, but most of the conditions in the north and eastern Midwest will see normal as far as rain and precip is concerned. Still worried about Western Europe drying out. Parts of southern Russia is dry. Ukraine's getting a little bit more moisture. China continues to see above normal rains, and India monsoon is pretty favorable. So we've taken a lot out of this marketplace. We're below pre-Ukraine war levels. Still a lot of word about people trying to work out various ways to get Ukraine exports out. But it still looks like Black Sea wheat exports and corn out of Ukraine is going to be below the USDA's numbers, which doesn't seem to offer support yet to the market, with our export inspections running behind pace to meet the USDA numbers. The other thing I think the market is going to be worried about is just this whole recession depression talk. We will be watching pretty closely any news as far as interest rates are concerned, with the stock market down and the dollar at 20-year highs. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. Behind me is a corn and soybean field here in northern Illinois. You see the corn looks very good. It's growing a lot. It's got anywhere from 4 to 5 inches of rain over the last couple of days, and so the conditions there are good. Beans are still running a little bit behind normal pace, but also looking better than they did last week.